Good afternoon. Well, it's been 3 years since Lehman Brothers failed, and some days you pick up the newspaper and you feel like the crisis never ended. Sure, the source of stress has crossed the Atlantic to Europe, but the symptoms all feel like they're the same. You have all this bad debt threatening the solvency of banks, feverish weekend meetings, Wednesday meetings among policymakers to save the system, stock markets euphoric this week, perhaps despondent the next. Now, here in America, a lot has changed, though, in those 3 years. We came out of that crisis with a determination to never let something like that happen again, never to be forced to choose between bankruptcy, as we had with Lehman and all the attendant chaos, or bailout, as we did with AIG and Bear Stearns and all the political and moral hazard damage that created. The result was Dodd-Frank, the most important new financial regulation in the United States since the Great Depression. Dodd-Frank takes away many of the powers that were used by the government in the fall of 2008 to bail out companies like AIG. And in place of those old practices, it creates a new authority to take over a large financial institution. This new regime is designed to protect the taxpayer from the costs of bailouts. And it only gives us two options: bankruptcy or resolution under what is called Title II. This would mean firing the management, wiping out stockholders, and probably forcing some creditors to take some losses. Policymakers, legislators, regulators, not to mention the financial companies themselves and their armies of lawyers, they have spent untold hours not just writing but studying this law and all the accompanying interpretive rules, trying to understand them. But it's still very much a work in progress. And to the public, it's something that's very much shrouded in mystery. The truth is, no one knows with certainty what would happen if a large institution failed under this new environment. And of course, large banks are even larger and more dominant today than they were in 2008. And the failure of one could wreak severe havoc on the financial system. So far, it's not been necessary to discover what happens when the awesome and some would say draconian powers of Dodd-Frank Title II are invoked. Until today, here at Buttonwood, we are lucky enough to treat you to a visit inside the war room of the government as it grapples with the Lehman-like moment, but in the new world of Dodd-Frank. We've created a fictitious bank whose size and sprawl guarantee that its collapse would be devastating to the markets.